Hello and welcome as we head into Tuesday, the 7th day of November 2017. My name is Derek. Time for a hashtag crypto trading video. Everything you do is within your own risk and your own reward. Let's start off within Bitcoin using the 400-minute time frame. That represents a little under 7 hours per period, but it makes the blue line represent a 5-day moving average. And when we see this run higher, we have now encountered an 18 average, a front weighted of highs and lows, which is starting to turn lower. Let's look at this more closely. The original support in here was a higher low from this one and barely a lower low, but both of them are barely. And when we look at this, is this developing an early sideways consolidation with a lot of these markets do? You have a nice rise higher and go sideways. For looking back, you would have seen even in here that resistance was here and support was there. And if we draw lines out all the way through, it did a very good job in determining the range for a significant period of time further thereafter. It did have this failed breakdown that resulted in a very small fast move to the upside. And then what looked like a possible failed breakdown, or breakout, excuse me. Failed breakout, you'd expect a fast move down towards here. No. And when we look at this more clearly, within how the 18 average plays through. Here's a spot where the band starts to go flat and a little bit lower. Within such, it makes a low, which in here was lower than this, resists an area of support, comes back down. So the 18 average, of course, went sideways, resists the 18 highs, then barely makes a lower low, but then it contains two periods thereafter which hugs or resist the 18 average of lows, which is a bearish signal. And then you almost get confirmation here that this thing is ready to fall, and you're probably going to at least test this low. So what do you get? A little further lower action and just a little further and not for that much longer. So the setup was a failed setup, fast move higher, because of this failed breakout that looked in play and the setup for going lower here, and there's your fast move. Now when we look at this possible range, keyword is possible, but 18 average flattening after resisting, barely making this low. Now within such, you had a pause candle after the big red one down that broke the 18 lows. Within the pause candle, it was relatively bearish and more warning signs of lower prices because the action after making this low came up to this previous support and the 18 lows and then came back down close to its previous period low. So that's a very, very bearish signal, but a retaliation green move up. And if you even see something simple, like the next period has a green candle up that makes it close or to the 18 average of highs, just a short-term analysis could state that this is looking like a small failed move, and you'd expect a small fast move, which might be a rise up to between 77 and 78 for a small play like this. But because support has been established within this area and it's already had a little bit of a play within this area in here, if I were to see further that the price action were to make a play down towards this area in here, then you would have a good chance that this maybe immediately and maybe over a period of time with a higher or lower high, lower low pattern come back and at least next test this 5K area. All right then. Another one quickly too. And I mentioned before, if it does make that play where it quickly has a move in here, if you even have a quick move in a situation like this, if within say 2 to 3, 4 periods max, if it makes a fast move to here, then because of the precursor event on a break of resistance, you could probably take it pretty darn near serious that it could have a good chance of breaking for good gains. But that's that situation where you have a nice little failed move in the opposite direction that recaptures itself fast. This happens more often in the gold, silver, COMEX stock market than it does in here, but it does happen in this crypto game as well. Let's take a look next at THC, and we'll use the 400-minute time frame as well. I was a seller at 279, which was this previous high. I was also a seller at 339, this previous high. I also had sell orders north, 2 of them. That did not get triggered because it didn't go quite high enough. I have yet to buy back because I'm going to move this over to a daily time frame because I'd rather use that one. And the reason why I don't want to buy now is because it's like at the 18 average of highs, as it's also in a downtrend too. In a downtrend, if you want to buy on the cheap, if you want to buy expensive, you're buying near the 18 average of lows. And if you want to buy cheaper than that, you wait for a big dip. So this is buying expensive, this is buying cheaper. Also, furthermore, when you see the moves like this, you sell above the 18 average of highs. You have your orders ready to go. It means when the markets are moving higher, your upper sell orders, you may want to raise a bit more, at least for some of them, because you have a better chance of actually getting some good gains, as you can see the case in point back in here. If you are in a downtrend, like say with this one here, then you may want to decline or lower some of your sell orders. Even consider selling at the 18 average of highs or close to it. But you can look at it in this situation, say you notice in here that it's selling off near such. It would probably work out to be a losing play because you would miss these sell orders because you'd probably be a little bit higher and then you'd end up selling like right here. However, what's wrong with that? What would be wrong with selling right here at that time? Especially if you bought lower and anywhere below this 18 average of lows. Because that would make sense. Oh, I just pulled up an 188 buy. Let's put a sell order in for like 270. You got your profit. And look at all this time to buy it back at the 18 average of lows or lower. In a bull market, you want to buy back at the 18 average of highs down to the lows. If you're looking to sell above and buy back cheaper. What this market really hasn't had really any of, this was so unvolatile, maybe a little bit here, is a sideways market. But in a traditional sideways market, if you can establish the range, you just buy at the north end, sell on, and then, buy on the south end of the range, like down in here, and then sell on the north end. Yeah. But that's what I think is really interesting with these codes. They just keep on going up. So I'm going to be continuously looking, especially with the other codes like this, to just sell when the market decides it's going to have this. And every single time I see the sales, I'm never going to believe it. Every rally, whether it's in a bull market or bear market, in this is guilty until proven innocent. When this thing just pumps well above the 18 average of highs like this, it's going to come back really quickly every single time. And when I look at the move of this period, it's pretty weak. And also, how common is a pump followed by continuous upside action. And here, sold off immediately. This one here even, sold off immediately. All of these small intraday ones. This green candle up, next 2 days went back down. Here it had 2 consecutive days, came back down. 1 day, back down. Here's a span of 3 days going up, coming back lower. So it doesn't usually hang on to any type of big rallies that it may happen to get. Because if any type of these codes have decent large gains, if it's for real, it's all right to have big retracements back. If this thing pumps immediately from, say, 260 to 650 or something, it's okay within the day or the next day to come back to 420 or 430. But what you'd have to see is where's a key level of resistance that you could mark for the entire duration of this time frame. And one area is something like around in here. So if the price were to have any type of bump up here, if it can manage to hold and stay above here and then be able to build upon it, then yeah, maybe it would go. And in here, when it went up, well, it did kind of find some support in here. So that was possible that this thing could have got going. I mean, it doesn't have to support like up here. It can, but somewhere nicely above a previous trading range. And quite frankly, most of this trading resisted much lower than where this supported. And then you have your next push, which, given how strong this up move is, doesn't have to make a higher high, but most certainly would have to make a higher low. And you've established within this trading range somewhere around here. So this movement is fine. And then, of course, breaks down in here and then continued downside action. So it's hard to trust these movements that they have. Now let's take a look at another one. And this is TKS. I sold this today at 27,700, which is where the 18 average of highs is. I had bought it at here at 20,000. So where do I want to buy this back? 18 average of lows? No. It's in a downtrend. Maybe where it came from? Could even try to go for the lower low, but it's a downtrend. If it makes a move up to here, sort of like this, and I'm able to sell up here, then you might sucker me into buying here. And you see there that I'd still be trying to sell what I bought back here. And I'm fine with that. Because a lot of the stuff that I buy down there, well, some of it I can sell. And when you look at some of these intraday movements, you just sit back and think for yourself. If you look at these daily candles and how they position themselves, what percentage of the days have a significant rally that usually sells off intraday, if not shortly thereafter? Shortly thereafter would be defined as this green candle followed by a big red next. But when you look at these moves that come in place, this is something, if you wanted to, you could be very aggressive with if you are very active. Maybe if you try, you have a computer bot doing it. I don't know if that's legal. I've kind of seen, I think other people do it. I don't. I use everything manually by typing in numbers and such. But there's a lot of opportunities where you could make hundreds and hundreds and hundreds of trades. And, well, over this period of time, you could make hundreds and hundreds, like so often. So many scalps available just in here. And when you're looking at a market situation, when you are looking to always sell when markets are higher, buy when they're lower, one simple way is always buying when it extends and selling, as I state, when it's lower, below the 18 average. But the basic way of looking at it is bull market, bear market, or neutral market. Because generally speaking, it's so easy to determine what a bull market does. It just makes higher highs and higher lows. So as far as a trader is concerned, if I'm putting sell targets in here, then if I'm able to successfully buy back, then I'm going to want to sell at a higher price and buy back higher than I did the last time. And in a downtrend, if you were to play something in this nature here, if you're able to sell on this peak, maybe you don't want to buy at previous low. Maybe you want to wait for lower lows. Situation here. Okay, I don't want to buy here. But in a situation, if say it does go down here, you've already made a move from 18 average of highs. How often going from 18 average of highs to say a previous low, how successful has that been historically? And here it managed to go to it, and here's previous low. And within this, if you were buying at 27,000 here because it matched this low after a good rally, then the best you had to sell was 35,000. So that could have been in play, but let's face it, there's a good chance that wasn't sold. It didn't even make it to the 18 average of highs. But a lot of times, things that you can buy long time ago can be sold within a decent amount of time. For example, this is CANN. This is going back to May of this year. So if you're in situations where, say, you bought back here, maybe you bought in this point, even buying here and having a sell order up here, didn't get the bills paid when this rally occurred. But you never know when things are ready to go, or if something like what we're going to see happens. And that was, oh man, it's 180,000 satoshi it went to from about 400. So whatever sell orders you had, you hit. Could you imagine getting, well, that would just been sweet to take like 20, 50 bucks and make a fortune out of it. Some people probably did. But we can see just by barely looking at these dots that those who didn't have sell orders in here was able to get them in here. Let's take a look at this a little more clearly. And all those 400 and 300 whatever prices from back in that day, 500 prices, had plenty of opportunity to get some profit on the trade. It also meant for the actual code itself to be able to make a push higher, as weird as that number was, hold a level of support and take off. And well, it's been a constant downtrend ever since. And again, we can see here, if you sell at the 18 average of highs, this one appears below could hit, it would work. And if you did sell here, I wouldn't consider buying until at least back in towards here, because oftentimes in these bear markets, they're just going to keep on rolling over. Unless, of course, as you have a good reason to think that this area of support is going to be strong enough to hold and you want to take a chance, but they don't usually fare too well when we have these pump and dumps consistently coming in. One thing I've been thinking about too, and I just paused as just a couple seconds ago because I was thinking about this, that who are these people that are actually buying this stuff up? Because if you put a sell order here in at 1096 or something, that means someone pushed the actual buy button off you then. And then later on, are they the ones selling within this market because they see that their portfolio or what they bet on is down significantly lower, you got to think that a lot of them would just, after getting caught up and making that mistake a few times over, stop doing it. But furthermore, after seeing these codes do this over and over again, you think you would see it. I mean, this is nothing compared to what I've shown. I'm going to quickly go over Potcoin now that we're at 20 minutes. I'm just going to go over this quickly. Because this one went up from where it was like around 1250 and almost made it to 10,000, putting in about an 8x gain on the play. Who would be buying in here? I'm not looking to buy back what I sold until I see around 1400 satoshi. I don't need to rush in and get in now. Oftentimes they'll pump up and then they'll have a nice little curve lower that spans at least an okay amount of time, and maybe in a week, 2 or 3, it'll pump up again. And with the 3-day time frame, going back to even the 2016 years, 7,000, and look how fast this manages to go back to 1,000. This move higher, back in here. This move higher, took a while but comes back. This particular day, this was several days higher, significant pushback. And this individual day, and then this day followed by this day, another pump higher, back to the band, and these small, and these are 3 days, but the periods for such, of course. And they happen quite frequently. So why am I going to think that it's not going to make a move to the 18 average of lows at least? It's in a bear market with the declining 18 average of lows that's trying to go flat. You think an attempt at a 700% gain would do a little bit to improve it, and I guess it has done a little bit to do such. But even in these bull markets, like in here, it manages to have the large retracements as well. So I'm going to be believing, and I got my buy orders in at around 14. Thank you for tuning in, and have yourself a great day. Bye-bye.